Happy Monday. We welcome you to Trading with Technical Indicators. My name is James Boyd. We welcome you on this June 9th. We'd like to welcome Amun, Mark, Fayez, Gary. By the way, Gary's on his phone. He has some thunderstorms in Georgia, and well done on that. That's why you kind of have different devices, right? Now, we also like to welcome Michelle and many others. Let's go ahead and get started. We also have Michael Fairborn in the chat. Mike, if you could as well, have that script on and scan, if you will, on MACD divergences. So that's going to be our topic here today. There's a lot of divergences we see in the current market in the shorter term and intermediate. So let's go ahead and hop right in. Now, we'll talk about some, but Mike actually also does teach a scripting class on Friday, and he's talked about a divergence script. So Mike, be prepared to share that. Now, just real quick as we get started here, remember the information is provided for informational purposes only. Also remember, if we bring up options carry a high level of risk and are not suitable for all investors. When we also talk about investing, also remember that investing involves risk, including loss of principal. Now, as we get started here today, I mentioned our focus is really going to be on bullish MACD divergences. And that bullish MACD divergence could really be a bounce setup and or a breakout setup. And that's what we're going to be talking about here today. When we hop right in, we're going to take a look at the indexes just real quick. When we bring up the indexes, we'll also mention some of the prices, some of the pricing that we actually see out there. I'm not going to say the F word, okay? It ends with an S, okay? But we'll look at some commodity prices, okay? Hint. And then also look at indexes. And then we're going to kind of focus a little bit on Dow stocks in our examples. So let's go ahead and just hop right in. Now, the first thing I just want to kind of just mention real quick, let me pull this up. So the comment was regarding, is there any way? So yep. Yeah. Yep. It's weird. Nope. Nope. Let me start that here. There it is. Okay. Sorry about that. Had a different screen shared. We're right back at it. So the question was asked regarding, like when I post on X, which I do frequently, if you, for example, let's say, so one of the things that's been on X is if I post something, you can get spam. So as of right now, what I'm doing is I'm just doing it where anyone that is a verified follower, that's number one. That's how we're getting reduced to spam. Second, what I could also do is if you follow me, okay, I'll follow you back, and that would also allow you to actually comment on the post if you wanted to, okay? So that's another way we could actually get around that. Now, I want to kind of give you a heads up as far as what is it that I post about, okay? So I mentioned earlier, about an hour ago, talking about bullish divergences. When you pull up the Dow, the NASDAQ, the S&P 100, there's so many of these stocks that look like there's little lows and lower lows, right? And then you really get a low on the MACD, and the MACD is not as low, and then it kind of leads to a bounce. This is going to be the focus of what we talk about here today. A lot of people like little pullback bounce setups. Those bullish bounce setups could also be diagonal breakouts as well, which also could be like bull flags. Same, okay? Now, also some of the other things I kind of post about is potential price patterns, okay? And so when I'm actually going through the market, meow, meow, kitty cat, maybe a little horizontal breakout. If you actually take a look at Caterpillar, you'll kind of see the same idea, okay? Now, these are not recommendations. These are just kind of examples that I'm just trying to show you some examples of what I post, so that way you can get a flavor. A lot of people say I post on X, and you're like, well, what do you post? I'm just kind of showing you some examples. Some of my posts are just real quick, some ideas or things that the investor might be seeing as well. Not every post has a chart with it. So quick heads up there. Now, also remember, you could also follow Michael Fairborn on X. He posts as well actively. Now, also, two quick things before we actually talk about the indexes. Yeah, so here's the thing. If you don't have to pay for X, the way we could get around that is if you follow me as a general follower, free, I'll just follow you back. And so anyone that, for example, if I follow you back, what that will really do is it'll open it up where you could actually comment back. So that's another way around it. We can do that. So I just want to let you know I saw the comment there in the chat, and that's what we could do, and we'll work on that. Now, the first thing I actually mentioned, yeah, and by the way, I do post about Jax as well, okay? Also, and I'll show you another post that was pretty cool over the weekend. This is the page, so if you go to youtube.com, just go to Trader Talk Schwab Coaching Webcast. We post pretty much all of our webcasts there, live and recorded. One thing I want to make sure you're aware of is if you say, James, I follow different classes. I'm trying to learn about different topics like this one, okay? Trading with Technical Indicators. If you said, this is like the episode, so to say, can I see the previous or a season, if you will? These are the episodes of the season of Trading with Technical Indicators. Last week, we really talked about timing moving average crossovers, which has been interesting, right? Also scripts on the chart, easier to identify. When is resistance not as important? Interesting, okay? And so these are kind of giving you an idea of what we've talked about, which has been kind of interesting, okay? Now, let's kind of forward that discussion. So today what we're going to do is we're really going to talk about some of these charts, and I want to pull something up for just a moment, and I'll pull that up. Actually, I should have that. Let me just bring this up. And so first thing what I want to do is I'm going to pull up a chart, and I'll grab that in just a moment. I'm just pulling something up, okay? And what I want to do is if I would ask you a question such as, what are some sectors in the market or indexes that you are following? What did you see today that stood out to you? Now, and I'm talking about indexes. Which indexes are you looking at? Now, the indexes that we're going to actually talk about, before I talk about those indexes, I'm going to bring up, first off, just mention a couple of things that were noteworthy to bring up today. Number one, silver has continued to rise, okay? And so the second thing that we've actually been watching is copper has continued to rise. So those are kind of interesting. Now, remember we said before, precious metals, you could almost say is like a sector unto itself that sometimes can actually be defensive in nature, okay? So that silver discussion we had on Friday, add the copper. The other place that we would actually also make mention of is steel as well, okay? Now you could kind of say what ticker symbols could go with that. I also want to make mention just real quick, if you take a look at, let's say, the VIX actually closed below, so what, it closed at what, 1677 on Friday? Not a bad way to end the week. Many of you would drink a nice tall glass of water to that, okay? This has been one of the biggest VIX crashes, okay, in history, okay? That's kind of nice. Because the longer you invest, you kind of actually see some of those records being broken. Not a bad record, by the way, to be broken. I just want to kind of bring up something just real quick. I'm just checking on something and bring this back up. So if we're talking about indexes, okay, we said, hey, which index is actually kind of bullish right now? Well, if I actually bring up an index that's kind of bullish right now, I'm going to go back to, let's say, the one. Now, not everyone likes this one, okay? But if you look at, let's say, the Russell, let's say 2000, what you're now going to notice is that's a little continuation. Now, this is not just, oh, yeah, just up. We want to see it pull back and get a bounce. Some people could say that, but this is a classic break. And on day two of the breakout, you've not seen a pullback. The key word is yet, okay? Now, the one thing I'm also going to do is if we pulled up, let's say, now remember, there's the Russell 2000 and there's the Russell 1000. The Russell 1000 looks like the S&P 500. The Russell 2000 is lagged, but you're going to see that if you look at that, that looks like a big cup and handle. Some might actually take kind of a more aggressive stance on this and say, James, I kind of see the base of the cup, maybe down to 1800. The rim of the cup, if you will, at 2100. Could it rally 2100? Now, if it does, the bears are going to pull their hair out if they have any left. But overall, nice to kind of see the small caps come back in. Now, remember we said before, if people are buying small caps, they're trying to take risk, okay? In other words, they're trying to buy groupings of stocks that might have a higher potential growth forecast and a history of that. Now, the other one that we also kind of want to point out is if you look at, let's say, the Dow Jones, which has been a laggard, that's going to be a focus of ours here today. The Dow Jones kind of has that same exact pattern. Now, we might make a comment, well, the market has already gone up so much, how could it go up any more? Well, I mean, you could say the same thing if the market was going down. It's already so low. How could it go any lower? Well, just now the opposite. So what you're now going to notice is kind of the Dow has been lagging, and it's kind of showing the same. So it's really the Russell ahead of the Dow, and now the Dow trying to get involved. Now, I'll be honest with you. I don't understand this. A lot of times people say it's hard for me to find stocks. If you looked in the Dow Jones Industrial, it wouldn't be too hard to find some bullish setups in there. Now, that's my question to you. Which stocks in the Dow did you notice actually here today that you actually saw maybe some bullish movement? Which ones? Now, what I want to do is also just kind of bring up something, okay? Speaking of, before I look at that, I'm going to pull up just NASDAQ, take a quick peek. NASDAQ is pretty much up near the high, 22,000. Okay, who says it could stop there? The SPX, and what you're now going to notice is that SPX top of the channel is at 6,300. We are literally within 100 points, which on it, when you talk about a percent, where we are now, 100 points to get to that prior high, 6,000, okay, 14, and we're about 1.6% off that prior high, okay? Now, you got to remember something. The market anticipates things. In other words, they invest or trade with the expectation that something might happen, like the tariff trade deals and et cetera. A lot of investors don't wait until the deals are signed. They speculate, okay? They speculate. So now, and so we haven't had any deals that I know of, like really, okay? But they're speculating, some investors, that those deals could happen, okay? And this has been one of the biggest runs, and I said in the history of that I've been doing this in 25 years, this has been the worst smearing that I've ever seen, okay? In terms of spinning people to think that it was going to crash, okay, and never come back up. Be careful of that mentality. A lot of times the market tends to work its way back up and chip away back in the upward trend. Now, before we kind of say anything on individual stocks here, want to kind of give you a flavor of really, is the portfolio bullish or bearish? Answer. Well, if you have a positive delta, you're bullish, okay? And so we could do a bearish position. That does not mean the portfolio is bearish. So that's one of the things, the themes that we try to focus on is having a bullish portfolio because the market tends to trade higher over time. I mentioned reasons for that last week, and some of you liked it more than others. You know who you are. A little fun there. Now, what I want to do is let's take a quick look at some individual stocks. What are some of those stocks in the Dow that we're going to focus on? Well, I want to kind of go back to an example like IBM just real quick. Okay. Now, if I were to ask you on IBM, and if you don't mind, I'm going to go back to a weekly chart, okay, for just a second. And sometimes it's easier to kind of see what's going on a weekly chart. If I looked at this on a weekly chart, kind of maybe something like this, what does it look like to you? I mean, if you ask me that question, I kind of say, well, it kind of looks like a V pattern, right? Where it runs up, okay, drops down, runs back up, flags back. And this is the candle from last week. Tell me what type of candle that is again, okay? Now, sometimes investors can be so fearful of resistance that they actually think the resistance is more important than the trend. They think the resistance is more important than the trend plus the higher lows into the area of resistance. Well, if you have actually an upward trend and you're making higher lows, okay, into that resistance might not be resistance for very long. Well, if we take a quick look at IBM, it's squirting higher, okay? Now, I wanted to now go back to the daily chart on this. And if you zoom in on this daily chart, I really want to kind of focus on the MACD down below, okay? Now, I'm going to kind of show you some different MACDs. Now, the MACD that I actually have that I'm going to set this up as is at 817.9. We know that there's three main settings of a MACD. 613.9, which would be a very short-term setting. Think of it as people that almost do probably trades, maybe 2, 3, 4, 5 days, okay? If we're talking about 817.9, we're probably talking about maybe a target area of 2 to 3 weeks. If we said 1226.9, lagging even more, we're probably talking about 2 to 3 weeks to 2 to 3 months extended, okay? So we're going to kind of use a medium setting. Now, if I take a look at this, what you're now going to see is kind of the MACD troughed, okay? But if you look up at the price, we kind of see like a W pattern. Oh my gosh, that's the first time I said the W pattern here today. And if you kind of take a look at this, a little W pattern, and we call this the middle of the W. Now notice when we got the middle of the W pattern being pierced or broken, there was a moving average crossover, that's what we talked about last week, right? We talked about the moving average crossover. And we said that sometimes investors, they try to make it so stinking complicated that they have no confidence to trade what they see because they don't really understand what they're seeing. Well, there's your crossover. There's your double bottom. You had a double bottom. The double bottom led to a higher high in the shorter term. When it made the higher high, moving average crossover. Now, the oscillator on the bottom, the MACD, started to show it turning up. Now, what is that probably telling us? Probably tells us that the stock fell down to maybe an area of support and is trying to bounce, and the oscillator, the MACD, is showing the confirmation of the bounce. But James, what do you take a look at? Do you stare at the MACD or are you staring at the price graph? Answer, the price graph. The oscillator is just the confirmation of what's happening on the price graph. All right? Now, trade number uno that we're going to do here today, IBM. Now, if we take a look at IBM, what I'm going to do, just real quick, is I'm going to do a stock trade if we can. I'm going to actually go back to the trade tab on the IRA. We're going to pull it up. I'm going to right click on the ask price of the stock, pull up IBM first off, IBM. And what I'm going to do is I'm going to right click on the price graph, okay? Now, for some of you that know, these candles that we're looking at, they are trend candles, okay? And those trend candles, you know you're in a pullback when we actually have orange or purple colored candles, okay? And then when you're starting to see that investors are starting to get back in and selling is starting to abate and the bulls are starting to take over, the candles actually turn green, okay? And it's been green for a couple days. Now, if we take a look at this, what you're now going to notice is we're going to right click on the price graph. We're going to go to buy custom and we're going to go with OCO bracket. Now, what I'm going to do here is I'm going to right click on this. Now, here's the funny thing, okay? A lot of times people say that I struggle in seeing the pullback. You should not struggle in seeing the pullback because the color of the candles are telling you it's a pullback. Can anyone tell me the difference of what happens if the color of the candles in the pullback are only orange? What does that mean? If the color of the candles are only orange, what does that mean? And is that a bad thing? Anybody know the answer? Well, if the pullback is only orange colored candles, that just means it's a short, shallow pullback, okay? That wouldn't be a bad thing. Think of that as a bull flat, okay? Not flag, flat. If we get orange, purple colored candles, the pullback is a little bit more severe, but if it's orange, only orange and purple, it's kind of still a shallower pullback. If we got orange, purple, red color candles, the pullback has been a little bit more severe. The price had to drop more to get investors to start to get in and the sellers to actually stop selling, okay? And the bulls to start to take over. So if you said, well, do I want purple color candles? Not unless you want a deeper pullback, okay? The investors say, which color do I want? If I do get a pullback eventually, just orange, please. Shallow pullbacks, okay? So if it's orange, purple, red, deeper pullbacks. Orange by itself, shallow. Orange, purple, medium type pullback. Okay, so I just want to go over that. Now, if we like to look at this in terms of a target here, okay, what I'm now going to do is going to take this old resistance area, this old high, which is probably right where the moving average is, or could be right around 267 and change. Going to set a stop right below there. Now, what I'm going to do is, remember, our goal is we're trying to buy when those color of the candles, they're green. Okay, green colored candles. Trying to buy when the price is above the moving averages. 261.83. I'm going to type that in, 261.83. Got actually a stop right there. Remember, that's a trigger to sell. That's not saying where it's going to sell at. And if we drop this chart back for just a moment and said, where might this chart try to go to? They may have anybody on that? Well, if we drop this back to maybe like a 3-year weekly to try to get a sense of where this might try to go, sometimes I like to kind of take the old highs and extend it. And by the way, you could go back as far as you want and just kind of see how many of these highs can you touch. So the question might be, well, how far do you go back? I don't know. I mean, how many highs can you touch? And if you can keep going back farther and farther and farther and it keeps touching those highs, great. But in essence, we're really getting a line of resistance, or also known as best fit. And now what we're going to see is that potential price target might be in the ballpark of really, let's say, about 292. So I'm going to put this about 292 right here. Now, I want to bring up a question that Leo said. Leo's question was, no concerns with the whole counter being at 6. Well, not necessarily if it's like a fresh breakout. Okay, so let me kind of go back to something. So I'm going to put a target at 292. We got the stop price right at 261.83. And what I'm going to do for capital-wise, our capital that we've been using is right at 6,500. Now, a lot of times people might say, well, James, I struggle with like timing. Well, that would be interesting, because if we use what we're talking about, now if I'm taking $6,500 and it's a $272 stock, how many shares is that going to be? It's really going to be, if we round down, about 23 shares of stock. So what I'm going to do is I'm going to put in 23 shares of stock. There it is, 23, and just snap that. Target, 23 shares of stock, 272 apiece. Is really getting to 6,500. Now, let's kind of go back to timing for just a second. Now, remember, we can see timing in 2 main areas, okay? Number 1 is if I actually let's say, go to the Market Watch, and I, for example, just brought up the public list of the Dow Jones, we can see timing. What do you mean by that? Well, we can see timing on the HC column heading, okay? So that 10HC is the 10-day moving average, the whole moving average, that is, and it's counting the number of days that the moving average has been green or red. So we could actually see that the IBM, now it just goes from top to bottom, okay, 13 down to 1. So if we actually looked at IBM, I mean, we don't need a PhD, okay? We can count to 1 to 13, okay? Let me understand. If I said, hey, the IBM example that we're actually looking at is 6 days into the move so far. Let me ask you a question. Does that mean it can't go up any higher? No, okay? Now, my initial comment was, it's 6 days into the move, but it's also something that is breaching resistance. Where can we also see that as well? Well, if we go to the 20-day high, 55-day high column, we should also see that it has that as well. And there it is. Where else could we actually see that it's also doing that as well? Well, we're going to go to the breakout column, okay? We're going to use those tools, and it says today breakout. Now, I mean, look, in terms of Leo's comment, like, does it mean if we buy a stock that is really now I'm going to go to the example of day 1, okay? Now, by the way, let me ask you something, okay? Give me an example of something that is breaking out potentially today. You got 5 seconds. 5, 4, 3, 2, 1. Okay, give it to me. Well, I mean, if we said today that is breaking out today, Well, if I look at something that's breaking out today, I can't say that. This is 9 days ago. Okay. Well, let me say it like this. It is breaking out. It is breaking out. Confirm on the chart. Is breaking out and is breaking out. But if we kind of tie it to Leo's question, which is, can we find something that really is breaking out today, but also day one into that? The answer is survey says Boeing. And we said this before. We said, oh, people are like, it's been horrible. Okay, look, I'm telling you, be very careful who you listen to in investing. The smearing that people actually do, it's amazing because they never come back to you and say sorry. Do you understand that? Be very careful who you listen to. I'm telling you, I've seen people literally listen to people and go down a path of 2-3 years where they couldn't trust a trend or see an uptrend to save their life. Okay? Be very careful. That's the warning. Okay? And the reason why I kind of say it like that is people that tend to be bearish can only see bearish. And they try to always trade the opposite side of trend, okay, which sometimes can be dangerous. Okay? Be very careful. Okay? There's a reason why we talk about what are trends and could they continue to try to take the direction of trend. Now, we don't know if it's going to go up, but we're saying, hey, if it's in a trend, the investor's trying to respect that and trade the direction of trend. Now, what I'm going to do here in this example is we're going to go back to that IBM example. And with that IBM example, we're going to actually put that trade in. And that IBM example, let's go back to that. Did I put it right there? No, I must have put it right there. That's weird. Okay, yeah. Let me just make sure. I want to go back to that paper money account. Let me actually just see if the working order, guys see it should be in the IRA. Okay, it maybe is at the bottom. There it is. Okay, I was about to say we didn't send it yet. So IBM, there it is. Target, stop. Confirm send, there it is. Okay, with stop orders, there's no guarantee. This is a stock trade, okay? We're going to send the order. Speaking of actually Boeing, we're going to go back to Boeing for just a second. And we're going to go back to Boeing for just a sec. And we're going to take a quick peek at that chart. And I want to kind of bring up the MACD again, okay? Now, this one is kind of more in line with what you would expect if we're talking about a divergence. Now, many technicians, they're always going to say comments like, well, you got to see something going down, 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 down on the price graph and the oscillator going the opposite direction. Who says? Have you ever back tested the differences? I have, okay? Not sure if there's a whole lot of differences, okay? Now, if we take a look at this, sometimes you could say, yeah, absolutely, the price has gone down, sure, and the oscillator is going the opposite direction. Sure. But what happens if the price is not going down, but it's actually going up? Does it mean that bullish MACD on the bottom doesn't matter? And I'm going to push back on the typical technician and say, have you back tested that? And the answer to most is going to be no. Okay, I haven't back tested it. Okay. So the biggest actually thing is when you get a stock in an upward trend, and you, for example, get something, let's say, that has a trough in the MACD, let's just call this number 1, and a second trough that actually looks like this. Now, let me ask you a question. How come that second area, and I'm talking about right here, how come that MACD is not going down as far? What does that maybe telling us? What does that maybe telling us? I mean, forget what it did today. Okay, let's go back to where we could only see Friday. If the MACD is actually down like that and all of a sudden we see it turn, could that be a potential indication of a bounce? Now, if we go back to, for example, this prior low, then this prior low, and then this area right here, could we have like a diagonal support? Yeah, sure. So what do people do with these bullish MACD divergences? Whether the trend is down, the trend is up. They're trading bounces. Now, what's a confirmation of a bounce? Well, when we actually look at the chart and we actually see close above the high of the low day, blink, right on that chart, we can actually see that green dot right there. Now, let's go back to that other kind of trend candlestick chart, and let's look at Boeing and kind of show what the candles look like. Now, if someone said to me, well, James, I just don't know when to get in, let's kind of use a very simple kind of practice, which is if we see orange and purple color candles, so far it's been kind of more of like a medium pullback. Shallower would be orange only. We talked about that, okay? Now, when is that trend starting to go back up? Well, let's kind of go forward and see what we got. Well, first indication of that is the trend is starting to go back up is the 10-day moving average going green. Candle then goes green, okay? Then if we actually go, now that could be for some investors an entry. The first sign that bullish investors are stepping back in. Now, let me ask you a quick question. Do you think you could read that? Do you think you could say, hey, the orange colored candles, shallow pullback so far. Orange and purple, medium pullback. If that pullback leads to a green candle, those bullish investors are starting to step back in after a pullback. Then all of a sudden, if we start to see both of those lines on the moving averages go green, investors are starting to step back in even more. Still green candle. Could you read that? And then if we get the green candle, and if we get the stock to go up again, and we get a moving average crossover, what is this now showing us? Just more confirmation of a shorter term trend that pulled back and is pushing back to the upside, okay? Now, it's very important we kind of walk through that step. Some investors, they like to get in that first day. Why? Closer to support. Some investors said, I want both the moving averages actually green, give me more confirmation. And other investors say, I'm not getting in until I get a crossover. We hit that up last week, okay? So everyone is not going to get in at the same time. Some people like to get in earlier, medium, and more of a confirmation. Now, if we take a look at where we are here today, that is the candlestick. Now, some investors, they like to say, look, I got some stocks, sure, but I would like to kind of do maybe like a cash secured put. Sell a put strike where the investor thinks the stock could stay up above a certain level, okay? Now, in this trade example, what I'm going to do, or try to do, if we have capital left, I'm going to go to the IRA account, and what I'm going to have to do, I'm going to go to the margin account for just a moment, and I'm going to go to the trade tab, and what we're going to do in this case is we have a current position already, okay? Now, it's sitting about 74% of the maximum gain. Not going to spend a lot of time on this. I'm going to take this position down with 11 days remaining. Right-click on that, create closing order, sell. We're going to try to take the $212, okay, and take that profit. And then what we're going to try to do is put on a new position. Now, we're going to go down to the July expiration. Once we go to the July expiration, what we're now going to do is say, could we sell a put, okay? And what I'm going to do is, since we're in a margin account with about $32,000 of capital, what I'm going to do, I like to sell a cash secured put, but in the IRA account, I don't think I have enough capital to do that, okay? Because it's tied up with other stuff. What I'm going to do in this case is I'm going to do a $10 wide short put vertical. And we're going to sell the 270, or are we? Let's take a look at the delta, 42, okay? That's a change in the option price over the change in the stock price, or it's also statistical probability of the stock being below the strike by a penny, okay? If we take a look at this, we're going to go down to one more. We're going to try to give a little bit more breathing room. We're going to sell the 265, excuse me, and then buy the 255. Look at the bid-ask spread, open interest, and volume. Right-click, sell, vertical. Now, what we're going to do is we're going to widen that out. Now, why do you widen it out? Well, you might widen that out. Now, don't just assume there's volume there. Don't assume there's open interest. Verify that 255 is there liquidity, okay? Got a 213 credit, got about a 787 risk, and you're given the vertical, and you're going to see those are the numbers. Volatility on this, oh my gosh, you know what? It actually didn't pull up the Boeing. I just saw that. Didn't see your comments, but I see something going by. But actually, IBM would still be the same. That's actually interesting. Yeah. So IBM, we sold IBM, which is fine because it's 77%. This is at 82%. So we got another problem. I'm going to sell this one too. Okay, sorry about that. Working off both of those accounts, and you're going to see create closing order, sell. So that's not any different. This is at 82%. Okay, thank you. I caught on to that. Confirm send. Okay, just getting rid of that. So got rid of the IBM, then also actually Boeing as well. Getting rid of the Boeing. Come back. If we actually look at the stock price, 218, and you're going to see that if we look at, let's say, the 210 strike, it's 425. 20-cent bid-ask spread. Open interest on those, pretty good, right? So if I looked at the 210 and I did, let's say, the 200, okay? Now, we kind of knocked out two birds with one stone, if you will, IBM and Boeing, because we're talking about those both. We actually now have, for example, Boeing there, selling the 210, buying the 200. Not much difference on the credit. Maximum loss given the vertical, not much different than what we saw in the IBM. Okay, there it is. And there we actually have the credit there. Okay. Now, here, this is also a good reminder. If you ever did that, okay, just always go, just kind of verify, read the order out loud and say, hey, is this a stock I wanted to do? If it's, I mean, this is where you would catch it, or you should. Read the order out loud, vertical Boeing, okay? Numbers in terms of IBM and Boeing, not much of a difference. We're going to go ahead and send the order and see if it can fill, okay? Now, what I want to also do is I also want to go back to just a couple other stocks, and I'm going to fast fire a couple. One of the other stocks that is kind of standing out a little bit, now this is not as much of a divergence, but let's say the investor said, James, I want to trade a moving average crossover, and how do I find it? Well, let's kind of go back to our tools, okay? If I actually said, now let's take 10 seconds here, okay? If I said to you, find me the stock that is showing a moving average crossover today or in the last day. 10 seconds. 10, 9, 8, 7. You're counting fast. 6, 5, 4, 3, 2, 1. What's your final answer? All right. Now, if we kind of actually came and said which one is actually showing crossover today, well, it's actually Honeywell. Now, whenever we talk about scripts, it's not guaranteed for accuracy or timing. You want to verify. You got Honeywell. You actually, if we're talking today or in the last day, you're going to see that Merck is also there as well, but that's been in a downtrend. Okay, we know it's in a downtrend because when you look at the year to date, it's down 20%. If we actually said, well, in the last day, we said Merck already. If we're talking about in the last day, got Caterpillar. And if you talk about another one, which is GS, and I want to hit GS as well on Amazon. Okay, now if we talk about, now by the way, when you look at, for example, this is the same that we saw before, right? The 20 to 55-day high, that is just a duration of time. Is it hitting a brand new high in the last 20 days? In other words, 1 month of trading. 55-day high, it's about 2.5 months of trading. So this right here is really meant for shorter term, okay? 1 month of trading, if you will. The 55 is really meant for intermediate term, okay? And we could see right there on Kitty Cat, we can see that is actually showing a little breakout there. We could see it's also showing a crossover, and it's also picking it up on the today breakout. Now, going back to Leo's comment, Leo never knew he was going to become famous today, but Leo, you're welcome. Okay, a little fun with Leo. You're now going to see that is, when we talk about the counter, how deep into it are we? Well, 2 days green on the 10-period moving average, 2 days green on the whole counter. Now, I want to go back to the chart for just a moment. And what I want to do is I want to kind of see if we can. I'm going to go back to the little test tube for just a moment. Testing. Now, what you're now going to notice is on this chart setting that we sent last week, we called it the package. Okay? Nice thing about this, and we're on just one of these charts, it also has what we call the whole label. Okay? And if I say, hey, let's click on this for just a second. Let's go to the settings gear. And let's say show the bubbles. The bubbles is just going to kind of label the moving average. What does it do? Well, we're going to show you, okay? Click on OK, click on Apply. So what this really does is it's now going to really show us how deep into that move are we? Well, we saw on the previous price graph that it was really up for 2 days. It's really showing that right now, the whole moving average, at least on the 20-period moving average, it's been solid for 1 day, okay, on the chart. And now what you're going to see, and that's not showing, gosh dang it, this is the second time that the chart did that, but it doesn't matter. I was just showing the setting. But if we actually talk about Caterpillar, we saw on the market watch that it was 2 days. Caterpillar, it's been green for 2 days, okay? So what's the point? Well, sometimes what investors try to do is they try to catch it on the first, second, or third day. Why? Fresher in terms of the breakout. Why? Closer to the bounce and or the support area. Does that make sense? Okay. So it didn't matter if we had Johnson & Johnson up initially, okay? We're just trying to show how to change the labels. Now that we're talking about Caterpillar that we saw on the market watch, here we are. Now, let's kind of talk about this example. Wonder if we actually looked at, let's say, Caterpillar and said, now, by the way, how do you take those off? Once you have those on there, how do you take them off? Simple. Go back to the little test tube. Say, can you just shut those off? Go to the settings. Go no. Okay? And it takes them off. But a kind of a nice way to kind of see that. Now, by the way, I would challenge you, go back on the previous 10 entries that you had and see which candle you were buying on in the paper money account. I think you'd find that very interesting, okay? Now, if you said, hey, James, I actually don't have this from last week, could you share that with me? Yes. And remember that this is a grid of charts. And now what you're going to notice is, and we've been working on that grid for the last couple of weeks. And so we're just kind of there's different reasons to use different charts in the grid, okay? But I'm sending all the charts out at once. Now, what I'm going to do is kind of the significance of Caterpillar is really that we're kind of getting inside this old potential resistance area. Now, we have some old support there, and maybe the top end of that might be 408. Now, does anybody know if it's going to go up? I don't know. I can't see the future, okay? But if we're kind of talking about technical analysis, we see in the short-term high. We also see, for example, the midpoint of the channel. The midpoint, kind of two areas of the midpoint, might be about 378 to 388. That's the gap in the chart, and the top end 408. Now, some investors kind of like to trade this. Why? Well, because number one, some investors like to buy breakouts themselves. But second is some investors are counting on that if investors are short the stock, a breakout in the stock might cause those investors to cover the short position. And so you have bullish investors who are buying in from no position or adding to a position. The second thing you actually have is bearish investors exiting their position, which could be like two people trying to get in, okay, or out of a position. Now, what I'm going to do is I'm going to go to the trade tab and I'm going to sell trade tab. And I want to go to the paper money account, trade tab, Caterpillar. And if we look at, let's say, around the trade tab, Caterpillar, okay, we're going to go to the July expiration. In our examples, we like to at least see 20 to 50 days to expiration, monthly options typically. And if we look at, let's say, what strike has a delta between 30 to 40 with liquidity, you really got about the 350, the 7 by 730, about 1,000 contracts. If we're talking about selling this one, want to try to make sure we get in between the bid and ask, like 715, and then try to buy below, if we did a put spread, okay, the 350, 340, okay? That has 2,500 contracts. We're going to right click on this, sell, and what we're going to do in this case is sell the 350, buy the 340, 262 credit, and that's going to really give us, in this case, hold it here, a max loss of 738. Now, the one thing I want to kind of bring up in closing here, we brought up IBM, okay? We brought up Boeing, we brought up Caterpillar, but if we brought up stock number 4, Amazon, and Goldman Sachs, what list are we pulling from to find these? Answer, The Dow Jones 30. How many stocks are in the Dow Jones? 30. Guys, I think sometimes we make it too complicated, okay? Sometimes there's examples right in front of us, and maybe we just overlook them, okay? Now, we're going to send that. I want to kind of bring up these two stocks in closing here. If we pulled up, for example, Goldman Sachs, does Goldman Sachs kind of have a moving average crossover as well? It does. When did it cross over? Friday. Today is really that second day. Could we actually say even in the short term that's a little diagonal breakout, potentially leading to horizontal? Could be. Keep an eye on that as well, and you're going to kind of see that it's getting inside this old area where it broke down from. If it can actually get above the 621, it might try to target, if we gave it a little bit less, and we're going to close here, about 662. Last one I'm just going to flash, Amazon. Talked about this last week, and you're going to see that has been, when did it cross over? Well, it crossed over last week, getting a nice little push, MACD leading to positive. So the MACD is a helpful indicator to kind of practice the timing of an entry, especially the divergence, but also the whole moving averages as we can apply labels to those and see the timing on those as well. I want you to go out and practice that. Is it something that you could learn from and have confidence in? And that's what's really important with any technical indicator, okay? And with that, feel free to also use the trend candles as well. I'm out of my time. Stay tuned for Cameron May coming up next. Thanks to Michael Fairborn for answering those questions in chat. And today we actually did, 3 trades, and we focused on the stocks in the Dow. Now remember that all investing involves risk. Stay tuned for Cameron May coming up next. Take care. Bye-bye.